Welcome to Bitcoin RoadShow, it's Craig. So, if you're looking at Bitcoin right now, you will see big gains. You're probably wondering to yourself, will they continue? And they should, now that we've broken this point, this 9200 point. And where can we expect to see? Anywhere between 10,000 and 13,000 maximum, I think. But then the thing is, should you be telling yourself, well, I want to buy in now, right? Don't FOMO in. You know, I mean, if you're currently trading right now and you're sitting there, you've sold out of a trade, fair enough. Maybe you want to buy back in again, ride it up a little bit. But I still do believe strongly, not like a it's a passing opinion that Bitcoin might go down. I still do strongly believe that after the halving, we will see exactly what we saw in the Bitcoin, the Litecoin halving. So, and also never FOMO, never get emotionally, never emotionally trade. That's the main thing you gotta steer clear of. The other thing I was going to say as well is just try not. Generally, if you haven't made much money trading and you haven't done it before, and don't get into it now. Just get into hodling. Just get into holding. I made a big fuck up the other day. I had bought Digibyte for 72 satoshis, and I sold it for 220, I think it was, and now it's up at nearly 300. Of course, I could never have guessed, and I've got to never look a gift horse in the mouth. That's the old saying, right? So I'm gonna be happy with the profit I made, even though I could have made a lot more. That's just the way it goes. That's the thing you got to fight. You got to not just fight the emotions of loss. You got to fight the emotions of greed. It's a real bad one, eh? So that is one point I just wanted to talk about right now. Was that? So for me, the big picks, as I've said, my friend asked me a while ago, and I got mixed up on what he was asking. But such a good call. He's the one who told me. He was the one who's been telling me for the last 2 years, solidly, no, maybe 3 years, about Digibyte. In that time, it's gone down heaps, but also he's kept on talking about it, and they're still, when it comes to the security side of things, fast blockchain and security with the DigiID, they have good things going on. Same as Zilliqa has good things going on, and another friend of mine happened to be into it as well, which is really good, and so both of us are look set to make good gains in that one. It's going quite well. I still think that Zilliqa, Cardano, and for mineable coins, I try to stay away from non-minables, with the exception of Chainlink. I used to buy into NEM, and I'm just not so sure about it now. But I wouldn't say it's a bad idea if you were into NEM, New Economy Movement, that is. There's a few non-minables. Let me think. Synthetics, AGI. I really do believe that the AI side of things, it's an open source kind of project that they've got there at Singularity. So AGI is one that I also hodl long term, because it went like scraping the barrel low, and that's pretty much. I bought most of the coins I told you about. From the amounts that I bought in the last 6 months, I bought them. I've accumulated more of them because they've been so low. Of course, I had Digibyte a long time ago, but I lost it all on the Cryptopia exchange, so I don't know how much. Quite a lot, actually. It really sucks. If I never get it back, it really sucks. But it's something you got to expect in the crypto game. Unless you're hodling, which is the best thing to do, buy yourself a hardware wallet and hodl. Here's the reason why you got to do that, right? So I've got a friend, Hayden. I don't know if you're watching this sort of crypto stuff, but he was asking the other day about this. And I was saying, get a hardware wallet. He said if he had something on his phone, he would just buy a little bit here and there. Now, understand that's a really good way to have it. Now, even though Coinbase, I wouldn't recommend it if you're someone who buys crypto all the time. I would recommend it for the fact that it's really easy to use. It's on your phone, and fuck it, you pay a 5%, 4 or 5%. It's quite high. But better pay 4 than 5% than shop around and try to find something cheaper, and then in the meantime the price goes up 20%. That's kind of the way I see it. Is you gotta not be too focused on these fees so much. As long as you're getting skin in the game, that's what it's got to go to. So, with that said, good hodling strategy is when you start off, go with a reputable company, because you look for these ones that are like, oh, this is in my area, oh, their price is a little bit better for Bitcoin. You know, if you stick to CoinMama, Coinbase, Luno, the well-known companies, they're highly unlikely to steal your money, go broke, and bugger off out the scene, because there's billions upon billions to be made. Why would they do that? It doesn't make any sense to start a company up, get well known, and then shut your doors. What happened with MT Gox years ago is a very different scenario than what is likely to happen nowadays. And that scenario, I still believe, was contrived by government, by the SEC and the Japanese financial control. I believe they threatened them. I haven't got any proof for that, but it just doesn't make any sense because of the architecture of these websites and the way that the coins sit on a website. They don't sit in a bunch of... It doesn't sit in a bunch of areas where you can break into the front end and somehow get access to these wallets. They come into they're a back end wallet, and the trading in the front end is only done on a ledger, right? So at private, we've been building an exchange there as well. It's the same way it works at private. You don't actually have, when you have a wallet address, that just translates to you within the exchange. That's not actually a blockchain. You're not actually on the blockchain when you're sitting there looking at your wallet on your trading panel, right? That's not how it works, right? So anyway, I'll just get past that one. Yeah, basically continue to dollar cost average, because I don't know if it's going to go down. I'm just pretty fucking sure it is, right? Where's it going to go to? You know, every time I've made a prediction in the past, as far as where it'll go down to, I've found that what's in my mind, let's say 3,500, it'll go to 3.8. If I say 4.2, it goes to 4.5. And the funny thing is, when I used to trade back in 2017, before I gave up for a while, when I looked at let's say a descending triangle of where the price action was previously, I would set a band, like a higher band and a lower band. I would just trade between those bands. It was here before. Oh look, it's gone down here. Maybe it's time to buy. Oh, it's gone down further. Oh well, just still hold on. It comes back again. Usually in a bull market, it's pretty safe bands. You have these safe trading bands you can go between, right? Again, fuck, here I'm talking about trading again. But what I really wanted to get into was those bands. When you're sitting there with money in your bank, you've still got to be doing the same kind of thing, but obviously between a currency rather than Ethereum and Bitcoin or USDT and Bitcoin. You're looking at from a currency basis wherever you live. Right, when's a good day to do this, right? A good day to do this is when it gets down to, let's say the lowest has been the last 6 months. If it gets down there, right, when it gets near there, I'm going to have money waiting in my Coinbase account to buy that, or my CoinMama or Coin, whatever it is you're using, right, Luno or whatever, and be ready to strike. That's what it really comes down to. Or be ready to cycle to or drive or whatever it is, or catch an airplane to your nearest Bitcoin ATM. It's really imperative you think about this now, because even though we're in a pandemic and a lot of the world's got no money, what you got to think about is this, right? Let's say the public wealth goes down by 50% in the next few months. That doesn't mean there's 50% less to spend on crypto, because when confidence moves out of the other markets, if you take the spare money that people have that currently goes into things like the stock market, bonds, all sorts of things, it's that money that's going to be attracted across to Bitcoin, which is going to make it grow, right? So it's not about how much money each person has. It's about how many people decide to say, you know what, I just lost money in Facebook stock. I just lost money on Tesla. I just lost money on stocks, bonds, and everything from every shape, derivatives and futures market, whatever it might be, running on the S&P 500, whatever it is, whatever market you're trading, or whatever you're buying into, like the housing market. So people would have gone against the advice that I gave most people, which is do not buy a house yet. Even if it still goes up further, it's just not worth the risk. Still, many people went in and bought a house. My friend, a friend of mine in London just spent 1.5 million on a new house, just like 2 months ago. When was that again? Maybe back in January. I was like, oh no, you didn't buy it. No, please, you haven't. Have you finalized it yet? And I was really trying to talk him out of it, but you know, at least they give him a place to stay in the pandemic, or else he would have. So that's one good thing, and he's got lots of money anyway, so it doesn't matter. But generally, if this pandemic thing hadn't been going on, it would have been a really bad move, of course, because you're going to get to the stage you're going to be in negative equity, and especially if you've got lots of rental properties. Like another, my close friend, very close friend, has got a lot of properties, but you know the rental market should still stay up. It should be fine, but it's very risky for some people if you're over leveraged in this market. But if you're not, and you're sitting there not living in debt like you should be, and even if you only have $100 or 20p, whatever it is, when things go right, dive down where I think they're going to go, you should think like this. Even if you miss out in Bitcoin because it doesn't go downwards, there'll be something else to buy, and use that to leverage yourself back into a good Bitcoin position. Or and that, by the way, could be it could be buying a house really cheap. It could be buying some little holiday home. It could be whatever it is. It could be buying a car that only costs you $1,000 now because people are desperate for money and they just want to, whatever it is. I know it sounds like vulture capitalism, and it is. But the simple fact is, there's always going to be a buyer. All right? And if you don't come along and buy that guy's thing for $1,000 that's worth $5,000, the inevitability is eventually he sells for 500 to someone else who's got much more money than you. That's exactly how the economy works, right? So you may as well take advantage if you have the money to spend. So what I'd say right now, it's probably not a good time to be spending. Even though I did say dollar cost average into Bitcoin, I don't mean go all in right now, because we're in a little bit of an upswing, and it could go up further, yeah. But it's most likely going to come down lower because of the law of economics. But when I think it will go up is around about Q4. Why is that, you ask? Did you? Oh, you did. Okay, good. The reason is because that'll be how long it takes for the effects of what's coming to us soon will be noticed by a sizable percentage. Let's say if 5% of the world population go, you know what? I think the government's really full of shit wherever I live, right? That just has to be 5%, right? And if that 5% decide to go into gold and digital assets like Bitcoin, that's when it starts to skyrocket, even if those people have 1/5 of the money they had 2 years ago, right? That's what I'm getting at. Play your cards right. It's a difficult, you know what I mean. If you have any questions, just put down at the bottom of the thingy majig. Yeah, so Bitcoin's still at 9,300. I'm just trading at the moment, so I'll be here all day watching this until it's time to exit. That's the only thing that really sucks about trading, is it does take a lot of time, depending on how you trade. If you, as I say, you should just hodl, which is buy and hold. But if you do decide to trade, the most stress-free way to do it is when you're not in a market like we're in right now. This market's shit, right? But if you are in a more stable uptrend market, you can just say, right, buy. You make a band. Here's my upper band. Here's my lower band. This is where I buy. This is where I sell. And as soon as so all you do is you sit there and say, right, where does it look like? It looks like it's going to come down. I'm going to set a buy order. Oh, it doesn't hit it. Oh well, I'm still in Bitcoin. I mean, sell order. Sorry, sell order. I'm still in Bitcoin. And then next time it does come down, oh well, it gets filled. Right, now that it's filled, straight away make another order on that higher level of the band. Then it goes up, oh, it didn't quite meet it. Oh, it comes back down again. Oh, I could have made money, but I didn't. Who cares? No stress. Next, that order's still sitting there. It comes back up. Now it does sell. Right, I've just made a profit there, if that's what you're looking to do. But I'll remind you all, if you are going to get into trading, just remember, the money that you're trading back and forth into could be worth zero. So it might be worthwhile to, if you do decide to trade crypto, to decide upon 2 cryptocurrencies that you like. For example, Digibyte and Bitcoin, or let's say Ethereum. It's a more tradable pair in many exchanges. If you think you can trade a difference between that, because Bitcoin tends to move first, but recently we saw Ethereum move before Bitcoin. It doesn't always work your way. It's a safer bet, because even if you lose money between the swings of those 2 currencies, both of them are going up long term because they're here to stay, right? Whereas fiat currencies are not here to stay. That's about the only thing I want to cover today, really, other than the fact that we could go still climbing. We could go up to 10,000, and if we reach that point, I would say it'd be somewhere around the 10,400, all the way through the possibly 13 grand. I wouldn't be going to sleep at 10k and setting a sell order at 13 to basically short it, to sell out to wait for the price to come down and buy again and accumulate, because that's when you get caught out. I really believe that if you leave a trade on an exchange, what ends up happening is people look at it and you already see you get bots that trade just underneath you all the time. Every time you put up let's say I put in something for 13,000 exactly, they'll put in 12,999. I'll go 12,998. They'll go 997. You know, that's how these trading bots work. It's not a person, that's a bot, right? They're not just sitting there watching the order book every second. Could be, but I don't think so. Anywho, yeah, I don't want to ramble on about Bitcoin too long. I'm just going to say, if you do get in, whenever you get in at whatever price, and you decide not just to hodl, but to trade, don't trade everything, especially if you're a kind of noob. If you're a noob, don't trade anything. But if you're fairly new, just try to accumulate. If you've been trading before and you have a trading history in other markets like commodities or futures, whatever it might be, for, you know, whatever it might be, trading oil, whatever, wool, if you're a wool broker, I don't know, whatever, you'll understand how this stuff works, and how if you've done any stuff trading that I haven't done, Elliott wave theory and HVF method and all this sort of stuff, then you'll be probably well placed to do okay, maybe. But even then, if you've got a long history in it, friend Steve, I don't know if you watched this, from Bulgaria, but English guy, but he was a trader in the traditional markets, just more recently got into crypto. Of course, he's got a history in it, so yeah, you're safe. And another friend, Johnny, as well. Yeah. So yeah, that's my advice is don't, because it is advice. Fuck it. Fuck this. Oh, you can't say that. My advice is, you don't want to sell out all your Bitcoin, all your crypto. If you've chosen very good cryptos like Zilliqa, like ADA, like Ethereum, like Bitcoin, like Monero, like Dash, even though I'm pissed off with Monero because I lost $7 grand or whatever it was on my laptop. This laptop right here, this so annoying. But yeah, hopefully I'll get it back. Who knows? Anyway, ding. I'm trying to load that hard drive on this one here and try to get my wallet. I don't know. It's just everything's a pain in the ass, man. I hate computers so much. That's why I've been in IT for 25 years. Anyway, I'm going to leave it right there. Oh, that's the point. Let me close off that point. If you've been accumulating, you decide you want to go trading, don't trade all of it. Always just try. My rule is never more than 30%. You should always have 66.6% in your hodl, at least, minimum, right? And continue when you trade to add to that amount, right? And then you can decide to dip in more of it. So let's say when that amount becomes 80%, because it starts to grow because you've been putting your profit into it, then you can decide, well, you know what, when I see a really obvious thing, like for example, let's say you see a massive stock market crash, we know that the S&P 500 Bitcoin's tracing it, and you think, you know what, maybe I should sell right now. I'm sitting on my Coinbase, I've got 1 Bitcoin, maybe I should sell right now because I can see that there's 4 different market factors. Unemployment's reaching a new high, Trump's doing a talk and he just announced that this is happening and it's negative news, and gold is taking a hit for whatever reason, and you think, oh, okay, maybe this means everything's good. Whatever signal you have. Let's say Litecoin, two days ago, Litecoin did this, and Litecoin tends to give signals for Bitcoin in whatever it is time space. Then, you know, whatever it is data that you're bringing in, if it gives you solid indicators and you're really confident about it, sometimes you just got to grab it by the fucking horns and do it, and then dip into that extra money that you made. Still, of course, mindful that you don't really want to go below 66%, because if it goes tits up, then and it's rocketing to the moon, and you're sitting there trying to chase this bull, you're gonna feel like shit. I've been there many times. Just recently with Digibyte again. Anyway, all right, that's it. Bye.